What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. It's going to be a very quick video today. We're going to go over the daily and then the 30-minute time frame. Let's get into it. All right, welcome back. We are here looking at the SPX. This is the S&P 500 index. Looking at the daily time frame, as you notice, we had a little bit of a pullback today, about 25 points. Nothing too significant. It didn't close below the low of yesterday. It kind of just went sideways, which is very similar to what happened here between June 3rd and June 4th. It went sideways the next day on a down day, but then gapped way up. So is it possible that we see something similar? It always is possible. What I want to do right now is I want to draw in the bulls camp just to see if this is a pullback as to where it can potentially go. All right, so this green rectangle, I'm going to go ahead and put as the bulls camp. That means it's the support for the bulls. It's a pretty big zone. I'm saying 3,000 to 3,130, and we've talked about as to why I think those levels are important. It's because back here on the chart, if you look back here, it did act as resistance, then got knocked down. It acted as resistance here, and then instead of just pushing through it, it just gapped way above it. And now we're seeing somewhat of a little bit of a pullback. That doesn't necessarily mean we're going to see it retest those levels, but it's always possible, right? We can see it move down like this to potentially go higher, or we might see it break down to maybe go, or we might see it break down all the way. The third option there is probably less likely. This one second is as less likely, and then this one's probably the more probable versus it coming straight up and then just potentially going like this within this frame for a while and then maybe bursting up or coming back down from that point. I would say this one would be more probable than not, or potentially just a gap up and then come into this to test the highs. Now, the reason why we probably saw this sideways action right now is because the Federal Reserve is stepping into its FOMC meeting, and it's an important one. It's a two-day meeting. It's the 9th and the 10th. Today is the 9th, so this is day one, and this is one of the meetings where they actually come back out of it and they talk about economic projections as to where they see the economy. There's been stated many articles that we are now in a recession. Obviously, the stock market looks like it's far from reality as far as what's going on in the economy. We all know this. But that is what I kind of see taking place here. We got this bear camp up ahead. That's overhead resistance, right? It has to close. This is the beginning of the window of where it really took off. So this 32.65 level is still here. It'd be funny to see the market just gap above that the next day. That would be kind of I mean, I wouldn't like put it past the market to do that. It'll be interesting to see what happens. Anything can. And then we're going to have the window close, obviously, is going to be at 33.31, 33.30, call it. And then we have our the one where everyone's keeping their eye on, the overhead resistance at 33.95, let's call it. Okay, so that's what kind of happened on the daily. That's what we got going on in the news. Let's go ahead and hop into the 30-minute time frame to see how those support and resistance levels acted throughout today. All right, so we are here at the 30-minute time frame. This vertical line right here, that represents today where it started moving past. So we basically, this is what we had out yesterday. We had an area of it was resistance and then turned into support. Okay, it was this line right here at 32.21, and it acted as resistance and then broke above it. And what I said in yesterday's video was if it breaks above, it then becomes support. And then guess what took place? The market gapped itself down to 32.13, pushed itself lower, and as you can see, it acted as a support in this range right here at, let's call it 31.95, and it acted as support. And what's interesting is if you look back in the history of the chart, what did it do? Well, it acted as support here and here and here. So it kind of, just mimicked that previous day support, which was, June 5th all the way to June 8th. Now, after that point, it moved the market a little bit higher and higher. And then once support is broken, it then becomes resistance. So this gap down turned this area of support into a red line, which is resistance. And as you can see, the price came up and it struggled to make it above it throughout the day. And as you can see in the last 30 minutes, we saw the price move lower and lower. So this is going to be the resistance for tomorrow, the 32.21. It was support. And then our level of support, so this was obviously an area of support for the day, but I always like to see some sort of resistance as well. So it has a very little bit of resistance. So what I'm gonna do here as far as the support level goes is I'm gonna draw out a zone for you, okay? It's just to really see what the support's gonna look like heading in tomorrow and how it's gonna interact the next day. So I'm gonna go ahead and draw out a rectangle of what I see. And I see it as here, this kind of zone. Now the reason why I think it's more like this kind of a zone is because, as you can see, it acted as resistance here, 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 and then it acted as support at the top of the zone right here, and then it acted as support at the bottom. So once the resistance was broken, then became support. And now this also captures in the 50 period moving average on the 30-minute time frame. So this box right here is really going from 3183, let's call it 3180 to 3192, you know, that's make it simple. So it's a little bit of a zone. And then the resistance technically will be this up all the way up to here. So we'll have this as a zone of resistance, and this is a zone of support going into tomorrow. So it's going to be interesting to see what the market's going to do, because really what's been taking place is it's been coiling up within this 30-minute time frame since June 5th to June 9th. So when things coil up tightly, you might see an aggressive move to either direction. Now, is that going to mean that it's going to gap below this or gap above it? It's a probability, or it's possible, but I guess we just have to wait and see. As far as right now, we have this resistance, this support moving forward. It's in bullish context, so I mean, keep that in mind. The pullback might not be that aggressive. If we do get that pullback, this is what it would look like on the 30-minute time frame that I've been talking about. It pulled back, right? It closed below the 50, and then it would come into this bull camp, and then it would close that gap, maybe just a little bit lower. You know, it might form somewhat of a hammer candle like this, and then push itself back upwards. But time will tell once we get into tomorrow. That's all I have for you on today's technical analysis on the S&P 500. Hey, I appreciate everyone's support. I appreciate everyone's comments and watching my videos. If you haven't done so already, make sure to subscribe. I do post the weekly scan series, which I list my entire watch list. And then I also do little quick tip videos. My next quick tip video is going to be about the dark money scan. So keep an eye out for that. I will see you all on the next video. See you later.